We still expect some more dollar strength, not just against G10 currencies, but also emerging market currencies. So if you look at how much the market is pricing in a Fed rate hike now, from now till the end of the year, it's about 30 basis points priced in. We think that can go towards the 40 basis points level. At the start of the month, this was 20 basis points. So you can argue that we are roughly halfway through repricing-driven dollar strength in the current environment. The other argument that I would also make is that leveraged funds community is still net short dollars, not long dollars. So they have really missed this rally in the dollar that we have seen over the past couple of weeks. And if this does continue, we would see them being forced to cover their shorts, and that will again add pressure on the dollar to the upside.
The next week or so is going to be quite crucial in terms of where managed money positions itself, because in the short term, we've got initial jobless claims, pending home sales on Thursday, Japanese inflation, Q1 GDP US on Friday, and then Yellen speaks on the same day, on Friday, at the Ise-Shima summit in Japan. Does dollar make new highs from here, and how do you approach the currency?
So the way we are looking at it, we don't think that dollar will make new highs. Yes, it will go higher from here, but it's not going to challenge the highs earlier in the year. And the reason for that is we do not expect a protracted series of rate hikes by the Fed. So even if they do go ahead...
Are they going to go in June, or is Brexit vote going to keep them cautious?
Yeah, I think July is probably more likely than June. But even if they do go ahead in June or July, the commentary surrounding it is going to be extremely dovish. They are going to emphasize gradualism again. And I think they will probably force the markets not to price in too many rate hikes further down the line.
OK, what are the implications for Asian currencies, Divya? Because you and I were talking about the Chinese yuan off camera. If we are in a stronger dollar environment, depreciation pressure is brought to bear on the yuan, and then you have the risk of capital outflows flaring up again.
So for the dollar CNY fix, it's again at a multi-year high today. But the market's still calm. There's really no panic, something like what we saw in early January or late August of last year. So I think the market is driving comfort in the fact that PBOC's credibility has improved, communication has improved, markets are much better able to predict where dollar CNY fixes are going to be on that particular day, because it's really tracking the broader dollar. Now, as you really point out, if dollar continues to strengthen, they will probably allow dollar CNY to drift higher as well. But for them, I think it's really important to manage expectations. They really do not want expectations of CNY depreciation to go out of hand, leading to further capital outflows, and then questions about their reserves being sufficient or not. They definitely do not want to be in that vicious circle, and that is why we think they'll be probably slow in guiding dollar CNY higher. They will probably let CNY appreciate on a trade-weighted basis and take some steam off dollar CNY.